Good afternoon to all my friends around the world, to all of our followers. The time right now is 2:23 p.m. Pacific Standard Time. The date 1/5/2013, and we're going to be talking about the S&P 500 chart, monthly, weekly, and there's another one that we always want you to understand on the S&P and what it started to do over here. Let's make sure we have it. There it is, and I'll clear the trend lines very quickly. What I do want everyone to know that these were the tops in 2015. We have come down to a major support line right around that 2000 mark on this daily chart. We have violated all the moving averages this year in 2016 and 2020 of the 220 of the point movement was definitely in this chart. So basically, the S&P 500 is in total jeopardy. It has violated all the daily simple moving averages, has hit and landed at that crucial support level. We are talking about the calendar 2016. We called this the super bubble right here. 1 year ago, before 2015 started, we said what 2015 and 16 is still in the super bubble. And it still is. And now I'm doing 2016 and forward looking in 2017. And we're not wrong. And we are going to have a 30% correction. Yes, this S&P daily chart is going to go lower. And yes, down here at 1950 is where we're looking for a pit stop, but the S&P 500 is starting out on a daily reversal program, and that's the daily. Now, when we take a look at the weekly, I'm so sorry. We're going to be getting a 30% correction as we move through 2016. 2016 will have a lot more volatility than 2015. That's what happens before a super big tsunami train wreck, and the bear will be in control later in the year. This is only 2 trading days, 17,155. That's on the weekly red line 20-week moving average. We've got a 10-week moving average that crossed over the 50 over here, and that 10-week is 17,515. Yes, it is. The 50-week simple moving average, which is the white line up here, that's at 17,563. And basically the 100 and the 20-day is holding the S&P 500. When I say there's going to be more volatility, and there will be an extremely amount of volatility, this is shipwrecked. We are in a super bubble. We continue to be in a super bubble, and there's going to be prices paid. Here is a monthly chart on the S&P 500, and so the bear is getting more and more control of a super big correction coming. Nothing's going to go down straight down in a row. No. But overall, we're going to have a 30% correction. And we are in 2016 and 17. And the volatility. Oh, yeah, you love volatility. You're going to get your share of it. And we can promise you that right now. And I'll give you the monthly moving averages on the S&P right now. That 20-month moving average is at 2032. We closed on the S&P 500 today at 2016. And we're definitely on a bear move on this wonderful chart right here that people have to deal with. This is a monthly chart and just started. And the 10-month moving average is at 2047. And it's been violated. And yesterday, the low was 1989.68. This is a yearly chart with only one thing. However, we're taking a look at where we're going to break these 2015 lows and what a big correction goes through, it goes through a period of strong volatility. And we did have that in 2015. Now there's going to be an increase in market volatility with the earnings season is not far away. We'll start getting publicly traded companies coming out here in a couple of weeks. And, there's a lot of things that are going on around the world and whatnot. But here's one thing that we do and can and will is we're in a super bubble. You click on it right there and it will take you. 3/5 of 2015 was the last update. 2015 and 16. All indexes are in the super tops. Same thing this year. 1 year later, same thing 1 year later. You can choose to pay attention or you can choose to be a victim. Whatever you want, it's yours. Do you want to get in our option trading? Get involved? Options are the biggest thing, the biggest money. We got liquidity things. We have all kinds of things available. I'm calling a bear move on the S&P once again, and we're starting to technically break down. We said that we would.